Bintai Kinden Corp said the group is working towards reaching an amicable solution after the company was sued by MBSB Bank for allegedly defaulting on a 109 million ringgit Islamic financing facility. The facility was secured by Bintai's wholly owned subsidiary Optimal Property Management to finance the construction of an on-campus accommodation for College Technology Islam Malacca. In a BOS filing, the group said it is sourcing for the appropriate review and negotiation with the parties involved in the concession arrangement to reach amicable solutions to settle debts owing to MBSB. The parties involved include the Chief Malacca Inc., the guarantor of College Technology Islam Malacca, for the repayment of the quarterly charges payable to OPM under the concession arrangement. Bintai adds that it does not expect any immediate impact on its financial and operational aspects, considering its ongoing projects and the progress of formulating its regularization plan to comply with the requirements of Practice Note 17 of the main market listing requirements of Bursa Malaysia Securities. On April 10th, MBSB claimed an outstanding amount of 238.52 million over Bintai's loan default, according to filings. MBSB is also claiming compensation charges of 1% per annum on the amount of 107.54 million calculated from April 7th until the date of judgment. The financing facility was obtained in 2018 in accordance with a concession arrangement of 25 years with Bintai as the corporate guarantor. Last month, Bintai said it has been classified as a PN17 issuer following OPM's default on the financing facility and the group's termination by MBSB as the corporate guarantor. Aeon Credit Service Malaysia ended FY 2023 with a record performance as net profit for its fourth quarter more than quadrupled to 95.34 million from 23.38 million a year earlier. Aeon Credit attributed the stronger quarterly earnings to lower impairment losses on financing receivables and improved bad debt recoveries. Revenue for the quarter also grew by 19.2% year-on-year to 432.66 million from 362.97 million, mainly attributable to stronger loan and financing growth. The group declared a dividend of 21 cents per share for the quarter, bringing FY23's total payout to 49.5 cents per share. It should be noted that the annual dividend is the highest paid since FY 2017, when it was 63 cents per share. For FY23, net profit increased by 14.3% year-on-year to 417.69 million, while revenue for the year improved by 7.57% to 1.64 billion from 1.52 billion previously. Aeon Credit said the better earnings were due to incremental increase in revenue and bad debt recoveries, coupled with the reduction in operating expenses, but was offset by higher impairment losses on financial receivables. Moving forward, the group remains cautiously optimistic that business sentiment will gradually improve to pre-pandemic levels. Aeon Credit says it will continue to closely monitor and assess the inherent credit risks in its financing portfolios, with proactive attention focused on enhancement of asset quality, prudent cost management, and improvement on financial and operational efficiencies by leveraging on its positive business fundamentals. The income of riders of food and goods delivery riders will be regulated by the Land Public Transport Agency to overcome the issue of manipulation or suppression of their income by the service provider company, said Deputy Transport Minister Dato' Hasbi Hasbibollah. He said the move was also in line with the Land Public Transport Amendment Bill 2023 passed by the Senate on April 10th. He said the Land Public Transport Act 2010 was amended to provide for government decisions involving the regulation of goods vehicle services, including the use of motorbikes through P-hailing service. He said the ministry is aware of the issue of manipulation of P-hailing workers' income, saying that this was the government's reason for deciding to regulate the industry. After the sitting on Tuesday, the Dewan Negara also passed the Commercial Vehicle Licensing Board Amendment Bill 2023, which also aims to, among other things, provide P-hailing vehicles as goods vehicles that are subject to an intermediary business license. Hasbi, during the winding up, said the ministry, together with the Malaysian Institute of Road Safety, had drawn up a draft curriculum or learning syllabus for P-hailing riders to obtain a vocational license. Pelikan International Corp clarified that it had received several expressions of interest related to the acquisition of its assets and businesses, but no definitive agreements have been finalized yet. The stationery maker was responding to an article that appeared in the April 10th issue of The Edge Malaysia, which stated Pelikan is looking to seal a divestment deal that could fetch some 500 million cash. The article, among others, stated that if the deal is successful, Pelikan will exit its core stationery business, which is the 180-year-old Pelikan brand from Germany. In response, the company said for the time being, there are no definitive agreements finalized and presented to the board of directors for consideration. In a boss filing on Tuesday, Pelikan said that it constantly explores and evaluates opportunities to maximize shareholder value, including evaluation of mergers and acquisitions, as well as divestment of assets and businesses. It also highlighted that overall, Pelikan's performance and profitability had improved over the years since its asset streamlining exercise in 2014. The last one was the disposal of a logistics property asset, which raised 81 million euros at the end of 2021, which helped to improve its balance sheet and enhance shareholder value. JLand Group signed a memorandum of understanding with Gentari to develop renewable energy solutions and green mobility ecosystem across the former's residential, commercial and industrial projects on Tuesday. Gentari will undertake feasibility studies to integrate RE solutions at selected JLG's assets and industrial parks. Meanwhile, the green mobility ecosystem will be implemented from the third quarter of 2023. The selected projects are Menara JLand, Komta JBCC, B5 Johor Street Market, Ibrahim International Business District and Bandar Dato' On. JLG and Gentari will explore potential installations of an EV charging hub at Ibrahim Technopolis and RE Solutions for JLG's industrial parks. JLG and JCorp Director of Real Estate and Infrastructure Division, Dato' Akmal Ahmad, said that this partnership signifies a milestone in its progress towards decarbonisation initiatives and enhanced capabilities in the RE sector. Gentari CEO Sushil Purohit says the collaboration will enable efficient implementation and explore Gentari's core pillars of RE, hydrogen and green mobility. Gentari is the clean energy solutions arm of national oil firm Petronas.